Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, January the 10th. And my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. There's not a whole lot to see there. We did get out of Japan leading economic indicators, and they came in line with expectations at 99.3, expected to be 99.5, so in line there. They did revise last month's number down slightly, but it still came in at 99.6. Then one thing to note across the pond, we got French industrial production, which they aren't really considered to be an industrial aspect of the European region necessarily, but that number did come in quite a bit under what was expected at negative 1.2%, expected to be unch. They did revise last month's number up, albeit slightly, from 1.2% to 1.9%, so a nice revision to the upside there. Then Italian retail sales better than expected at 0.7%, expected to be 0.2%. Moving back over here to the United States, we got a couple of numbers, not really ones to look at necessarily in form of unemployment claims. We got our non-farm payrolls just recently, so this isn't really going to be the headline number. It did come in better than expected at 216, expected to be 226,000. And then we have natural gas storages came in at a drawdown of 91 billion cubic feet, expected to be a drawdown of only 62 billion cubic feet. Must be cold up north. Yes, we even saw it cold down here in Arizona. It was into the 30s, frost and everything else, which generally doesn't happen. But all of that being said, the United States experienced a cold front, if you will, across the nation, and that really drove natural gas deficit more than anything else. We also have several Fed governors speaking today. We've got Bullard speaking, we've got Powell speaking, and Evans speaking. All of those guys usually doesn't make for a big market moving event, but I think today actually could really kind of stir the pot because a lot of these guys are starting to fragment from this interest rate increasing two more times in 2019 to some of them probably wavering a little bit on that. So we could see some rhetoric coming out of those guys, and that could move the markets. So let's talk about the markets right now. We've got crude oil moving higher, but pretty much unchanged on the day, back into that 50s, not quite to the mid 50s, but this is about the area where I was looking for us to come back to, maybe settle down before we resume to the upside or start pulling back again. I think that's mostly going to be dependent on some of the data coming out from the economic front, and we are moving into earnings season. Literally next week, we are starting to see all of the earnings. It's very difficult to be a premium seller right now in and around those earnings because the monthlies, the way that they line up, and the days to expiration. So that being said, I think crude oil is going to be more dependent on some of these other data points that we're starting to see, especially through the earnings. And then we've got gold futures, slightly lower on the day, but they're finding their little stride right here around this 1290 area, just slightly shy of that 1300. That 1300 psychological level is going to be a major resistance to get through, despite the fact that we don't have any type of Fibonacci here or anything else. It's just a psychological thing that you're going to have to know when we have those psychologicals. Just like with the crude oil getting back up into the 50 handle, that's a psychological thing that will continue to resurface throughout the age of time. And same with these things with crude oil, with gold futures being $1,300 a troy ounce. That is a big psychological resistance area. I expect gold to continue to peel off as I'm expecting equities to rise back to the point of control. So that theory is still in place. I did get overextended on my theory to the downside. That's fine. Markets have a tendency to press in extremes, and that's what we saw happen in the equities. All right, bonds unchanged on the day. They're probably really waiting for all of these Fed governors to start speaking to really kind of discern whether or not they are going to continue interest rates or trying to start to look at holding off on those. So bonds waiting for those Fed governors to speak, I believe. VIX is positive. It looks a little bit negative here because of the red on the chart, but we opened up higher than we are currently. That's why it's making it red. VIX higher on the day, still holding on to those 20s as the overall market is really trying to figure out a direction still. Are we topping out or are we continuing? If the market set up and ended like it is today, it looks very much like a continuation pattern to me and would make me believe that we're going to go up to the point of control. Now, that being said, it doesn't mean that we can't rally up here. I could easily see us rally up to about this level here, come back down to the value area low before resuming higher, all right? So I'm not saying we're going to go straight up to that point of control. I think we might work through a little bit, but get to that point within, the next week or so. So I think we're going to continue that pattern marching towards the points of control for the equities. Similarly, with the Nasdaq, it is negative on the day, but having said that, again, that continuation pattern looking like it could set up about the same way that the equities are, where you have the counter-opposing dojis. That has a tendency to make it look like a continuation. It is going to find resistance around this 6,800 area where we have the Fibonacci extension and the Fibonacci retracements. So that is still a lot of overhead resistance along lines of that 50-day moving average. That could also very well start acting as resistance on the way up. E-mini S&Ps looks like the same chart, right? This to me looks like, again, we could roll up to about this area. This one just happens to line up with the value area low, come back down to these Fibonacci's before resuming up. That's kind of the way I'm seeing this. I think we really got overextended to the downside on a little tantrum, and now we're starting to work through that to move higher. And if we look at the daily chart on the E-mini S&Ps, each blue section is a J chart. Each candle is a 30-minute section. And you can see overnight inventory made no attempt to really do anything except for maybe cover some weak hands on the longs. They started selling it, bringing the market back down. Coming into the day, the open markets, we see the markets just starting to push higher. I don't want to see that weakness late in the day like we've been seeing like we were seeing last week or the weeks before. That is a bearish undertone. We can see lately we've been getting that push higher later in the day, and that is very bullish. So that's what I would like to see going into the end of the day. A lot of this is going to be very dependent on what these Fed governors talk about, I think, today. So having said that, let's talk about a couple of the trades that I've done. I've talked about how I believe that the equities are going to move back to their points of control. QQQs, similarly, I believe we're going to start staying in this range. We might get a little bit of a bounce and a pullback, like I said, and I have that kind of baked into the cake for this trade. And I went into the Qs and sold the 142 puts and then the 172 calls in there for a total of 165. All right, so put on that nice little strangle for the high volatility. I really wanted to do it with SPY, but volatility in SPY is really low. We still have above a 50 ID percent in the Qs, which is why I went to those. So got that strangle on the 142, 172 strangle in February around the Qs. And then Macy's, they've got a big drop today. So, their forward guidance, their holiday sales didn't go too well, was what we're starting to find out. So Macy's took a big drop here. They don't have any earnings over there in that February contract that I'm looking for that premium selling strategy. And I went into the February and sold the, the 29 puts? Sold the 29 calls in there for 50 cents. So that would be a nice little move above this point of control the point of control is where I would start feeling some of that risk. But I think that this being very bearish, Macy's could easily just continue on in a bearish pattern up until they have their earnings, which are expected to be worse than what was previously expected with their announcement today. All right, and finally with LULU, Lulu didn't have any sales for Christmas and they were packed. So I believe Lululemon is going to be one of those where people are seeing some of these other brick and mortar retailers struggle. Lululemon, I think, did well during the holiday season. Packed stores doesn't necessarily equate to high sales, but in this case, I think that it is going to come back out as that they had very good sales. So I went into the February for a bullish trade in here and sold those 110 puts for $1.10. So sold the 110 puts for $1.10. Again, I think that we're going to start settling down around these point of controls until we start really seeing some earnings coming out for these different underlyings. I think they're going to be a little bit lame. So keep your eyes out for that stuff. I'm going to be talking more and more about these earnings trades, how to set those up, what the right strike location is, highest probability. So make sure you stay tuned for these daily market commentaries so that you can follow along and play along if you want. All right. So if you can't take that, take it easy.